my baby.
Gonna get my baby.
I'm going to get my baby.
Gonna get my baby.
I'm going to get my baby. Going to get my baby.
Alabama farmers in the Black Belt have had a long and sordid history when it comes to accessing private and public capital. A practice known as redlining denied or charged more for things like insurance, health care, food, and particularly banking services based on a person's race. While this practice is now against the law, this type of discrimination allowed incredible assets such as land, knowledge, buildings and social networks, and the ability to build generational wealth to fall from these communities. This loss hit the Black Belt, an area known for its dark-colored soil and history in agriculture, particularly hard. Today, despite the national trend toward more organic and locally grown food, Alabama consumers are purchasing 92% or $2.2 billion of its food from outside of the state, leaving areas like the Black Belt completely shut out. This got us thinking, what if we could capture these assets that are critical to building sustainable livelihoods by actually changing the way private capital behaves? Now, this type of shift would require capital to be more flexible to meet the needs of farmers, retailers, processors, distributors, and others in the food system. But this kind of shift could be a game changer for all of Alabama. Traditionally, when looking for a financial institution that can move private capital in a way that is flexible, a CDFI, or Community Deposit Financial Institution, comes to mind. A CDFI provides credit and financial services to underserved markets and populations, and can be banks, credit unions, and loan funds. Many communities across the country come to rely on the services that CDFIs provide because they bridge the critical gap that traditional commercial lenders can't meet. But in Alabama, the CDFI landscape is woefully underserved. The CDFI Fund, which certifies these institutions and provides technical support and operating grants, shows that there are 20 CDFIs in Alabama, and all of them are depository institutions like a credit union or bank. And this means they don't have the specialized staffing to do high-touch food system lending. We knew we didn't want to become a CDFI. Instead, we thought we could be the catalyst that sparked new conversation and opportunity among existing CDFIs, and maybe encourage new ones to develop. So our goal became to shift the culture of lending into food systems. And in order to do this, we focused on 3 areas. 1, building a pipeline of patient private capital. 2, brokering deals with lending partners. And 3, getting businesses investment ready. By focusing on triple bottom line lending, that is, loaning or investing in businesses that economically contribute to the community, offer livable wages and shared ownership opportunities, and are environmentally responsible, we could shift the way that we evaluate risk, provide positive returns, and build livelihoods again. In order to get moving, ECN adopted a value chain framework, which is a way of looking at all the players in a system and determining what would motivate them to do something different. One of our partners, Mary Ellen, describes why her organization wanted to be involved.
It was important for us to participate in the ECN pilot program as it gave us an opportunity to branch out geographically and provide financing to small local farmers who are often overlooked in the traditional financial markets. Just as importantly, it gave us an opportunity to obtain additional lending experience which will assist us in furtherance of our goal of becoming a Community Development Financial Institution, or CDFI.
With Mary Ellen, we created a pilot program with her organization, North Alabama Revolving Loan Fund in Huntsville, Alabama. The pilot fund will help make multiple patient capital or soft loans between $500 and $2,500 to businesses operating in food system value chains in Alabama. Approved borrowers will create a cohort and be moved into a pilot accelerator with the goal of increasing investment readiness. Graduates of the accelerator will get access to our lending partners, something that might not happen if ECN was not there to broker those relationships.
When Jessica and Phoebe first approached me about this pilot program, I was very excited. I've worked in the nonprofit industry for over 25 years, and I've seen nonprofit agencies be very territorial regarding their services. It's refreshing to me and very exciting to collaborate with other nonprofits so that working together we can just expand our reach into the community. And Jessica and Phoebe both embrace this idea, and so this is really exciting for me to be able to partner with them on this project.
Identifying the right loan fund partner that had experience and would be willing to try this approach wasn't easy. We also faced pushback from borrowers that the application process needed to complete the loan was too difficult, causing us to rework the process more than a few times. But after all, this is what relationship-based lending is really all about, working together to solve problems. And if you think that's difficult, then there is the money. How are we going to raise all of this money to lend? Again, finding the right partners is really important. One of our partners, Malika, talks about her connection to Selma and farmers and the importance of working together to make this cultural shift around private patient capital.
People kind of felt forced into farming, and now as people are realizing one of the biggest assets we have in rural communities is land, and one of the biggest needs we have is food. And so putting those two things together, you're slowly but surely having more and more people who are interested in that. But one of the biggest challenges to people being able to prosper based on the assets that they have, which, like I said, here is land, is capital. People have, there's a history of discrimination and racism when it comes to African Americans and women in terms of banks loaning people money. And I've talked to farmer after farmer after farmer who had a vision and who really wanted to start their own farm. They were tired of working for other people on farms. They wanted to start their own farms. And some of them are, as you talk to them, are just in tears because they could never get, they couldn't get help from the federal government. They couldn't get help from private lending institutions, and they were trying to survive themselves, and they wanted to go from surviving to thriving, but they just needed a little bit of help, a little bit of financial help to help them make that transition, and it just was not available.
So what does the future look like?
My long-term vision is that we'll be able to identify additional sources of capital for the ECN pilot program so that we can provide access to financing to others in need throughout the state of Alabama. I think probably, though, my bigger vision for the program is that we will serve as a model for collaboration for other nonprofits and be able to demonstrate how nonprofits can work together along with private foundations to scale up their reach throughout their communities.
So being able to partner, and for grassroots democracy, there are different parts. There's the economy, there's health, there's education, all the different institutions that make up a community. And so being able to partner with ECN around the economic piece is just such a powerful opportunity, because the things that we were thinking about, ECN was thinking about and doing. I mean, really, ECN was, even just advanced in terms of actually putting those things in place and implementing them. So being able to partner and have that expertise and that knowledge base and that partnership just makes the economic part of building the beloved community, building that model here locally in Selma, just so much easier and so exciting, and just it's just a blessing.
And as this initiative succeeds, expect to see several lending circles working with our efforts and depository institutions that are matching these lending circles' investments with grant dollars. And in the next 5 years, Alabama's going to look a lot different.
I'm gonna get my baby out the